And in five, four, three, two, one. Hello, and welcome to another episode of the Capital Gains Tax Solutions podcast, where we believe most high net worth individuals and those who help them, they struggle with clarifying their capital gains tax deferral options. Not having a clear plan is the enemy, and using a proven tax deferral strategy, such as the Deferred Sales Trust, is the best way for you to exit highly appreciated cryptocurrency, businesses, real estate, NFTs, primary homes, so you can create and preserve more wealth by deferring millions of dollars of capital gains tax or help your clients do the same. Hey, I'm your host, Brett Swarts. In each episode, I'm joined by some of the best real estate, financial, wealth, and crypto minds in the world, where they share their ideas, deal stories, and inspiration. So together we can make complex tax deferral strategies simple and passive income plans achievable. We're also streaming on expert CRE secrets as well. So for our listeners there, we so appreciate everyone. And I'm excited about our next guest because he is an expert commercial real estate investor. And he's going to be talking to us a little bit about, and let me back up actually. We're going to start that over because we weren't actually streaming quite live. So
It sounded good, man. That was nice.
yeah, so this is the double stream here. So and also I have Brecken Investment Real Estate Investmentgroup.com.
Yeah,
Say one more
you can
time.
always just look at the sign behind me if you can't remember the name.
And what's the hometown again? One more time.
Memphis, Tennessee.
Memphis. Okay, here we go. And five, four, three, two, one. Welcome to another episode of the Capital Gains Tax Solutions podcast, where we believe most high net worth individuals and those who help them, they struggle with clarifying their capital gains tax deferral options. Not having a clear plan is the enemy, and using a proven tax deferral strategy, such as the Deferred Sales Trust, is the best way for you to exit highly appreciated commercial real estate, business, cryptocurrency, NFTs, so you can defer millions of tax and create and preserve more wealth or help your clients do the same. Hey, I'm your host, Brett Swarts. In each episode, I'm joined by some of the best real estate, financial, crypto, and leadership minds in the world, where they share their ideas, deal stories, and inspiration. So together we can make complex tax deferral strategies simple and passive income plans achievable. I'm excited about our next guest. He has two parts of the world that I'm super, super passionate about: cryptocurrency as well as commercial real estate. And we're going to be talking about all things investing in Bitcoin mining. He's out of the great state of Tennessee, where it seems like the whole world is moving to right now. He is with Brecken Investment Group. Please welcome to the show with me, Sam Wilson. Sam, how you doing?
Hey, Brett, I'm good. How about yourself?
Better than I deserve. So excited to be here with you again. We had a chance to meet at the Best Ever Conference. I've heard a little bit about your story, but for our listeners to get to know you for the first time, would you give us a little bit more about your story and your current focus?
Yeah, sure. I mean, my story's similar, I think, to most people in commercial real estate. Especially as a solo investor, we start small. We always the story of starting in single family is not an uncommon one. And then eventually most of us burn out on that at some point. So I had my fill after about 5 years of way too much single family, everything from rentals to fix and flips to wholesaling. I mean, you name it, I did it. And then I said, man, there's got to be a better way. And commercial real estate always seemed like that thing that was outside of, like, I can't get there because those are, tens upon tens of millions of dollars in deals, and that's just too big for me. I don't understand. I don't know how to structure it, et cetera, which all that is completely false. You can. And so I just plunged in and figured it out. And so, yeah, I mean, that's what we do right now. Is I've got my hands in everything from RV parks, which is what we're focusing on solely this year, RV parks and boat and RV storage. I've got my hands in that currently. I have my hands in multifamily. I have my hands in regular self-storage. We've done a variety of different commercial asset classes, but are going long in RV parks and RV and boat storage this year. So, yep, in the last 4 years, I've done a lot of different commercial real estate, but that's where I am right now.
Awesome, Sam. And for our listeners getting to know you for the first time as well, I like to always take a step back, go back to maybe the high school days, the younger Sam, running around, maybe playing some sports, maybe doing some things, who knows, right? The days that we didn't have as much stress and we could just kind of just live free. But during those days, though, I believe you start to identify some gifts, right? Maybe some talents you have, right? And I believe we've been given these gifts. Some people call them strengths. Some people call them superpowers. I believe they're God-given gifts. They've given just to be a blessing and help to others. So I'm curious, what are those one or two gifts that you believe you are given, and how does that help how you help and bless people today?
That's an interesting question. Man, get it done. I think that's the thing when it's time to. I'm not so much afraid of failure. I'm more afraid of regret. And so when it comes time to just, hey, this is what we're going to go do and launch a new venture and take all the risk, man, I think, you ever met those people that have, or heard about people that have no pain sensitivity? Like, it's like a real problem for them. It's almost a problem for me in that I don't feel risk. Like, I don't know what the feeling of, oh man, that's risky. It's like, oh yeah, let's go. So I think that's it's a double-edged sword, of course. But I think if when it comes down to it, like if we're gonna go get some stuff done, just call me and we'll go get her done.
Beautifully, the gift of execution and getting things done. Let's now focus that on the topic at hand, which is investing in Bitcoin mining. And then we're going to tie into some commercial real estate opportunities that Sam is looking at. So, Sam, what's the biggest secret that you've learned so far in investing in the mining of Bitcoin?
Find somebody else that's putting together a fund. This is the cheater's secret, man. And this is the way I got involved. Because I don't want to take, much like investors come to me that don't want to take the time to learn all about the intricacies of how to take down a commercial real estate asset, I don't want to take the time or don't have the mental bandwidth to figure out what mining rigs to buy, where we place them, what our kilowatt hours of power consumption is going to be. I don't know how to underwrite it. I have no idea. But I know that I know people that know how to do that. And so I'm going to go in as a passive investor and hand them a pile of cash and say, hey guys, go invest it, go mine it, and you can, and I haven't quite determined whether or not I'm going to start reaping proceeds in Bitcoin or reaping it in US dollars, both of which I find are volatile. But yeah, that's the secret, I think, for me, or if you're interested in it. I have no intention to go out and just openly gambling on the open market buying Bitcoin. That's not where I am right now. So yeah, that's how I got involved, and so far so good. I'm enjoying it.
Excellent. What kind of returns are you hoping to achieve, Sam, on the Bitcoin mining? And how does that compare to traditional self-storage, multifamily, mobile home park investing?
I mean, sure, it's the returns are all over the map, as you know. I mean, we've seen Bitcoin as high as what, 60 some odd thousand, even in the last 6 months. And where are we now? Right, 38 or 40,000 somewhere today. I'm not quite sure where it's pegging today. But returns wise, we hope to see 100% return of capital within 12 to 16 months. So, I mean, you compare that to a self-storage investment or to an RV park. I mean, that's absurd returns. So, we're talking on a good RV park project we're underwriting right now, which is why we're in this space. And people who are listening to this are going to go, that's crazy. But an average annual return for us that we're underwriting is coming somewhere in the low 20s. So 20 to 25%, which is, I think, pretty strong for real estate right now. Most of the stuff we're seeing in multifamily, including exits, running, maybe 12 to 16% IRR. So it's a little, those aren't apples to apples comparisons, but so as far as an asset class for crypto, I mean, my gosh, to get 100% return of capital in 12 to 16 months projected is kind of insane.
Diversification is important, Sam, in any investment time horizon in an investor's portfolio. But when you're talking about 100% returns in 12 to 16 months, curious, what percentage of your investments are going towards this Bitcoin mining operation?
Not that much. I mean, because it's not a hard asset. I'm a hard asset guy. I like things I can touch. I like things I can feel. I don't like cash. So Bitcoin for me is a bit of a gamble. And I'm okay with that. Again, I don't feel risk. It's like, well, I'll just put it out there, and if we lose it, I lose it. And if we do really well, then we do really well. I mean, I'm not playing with my children's food money, right? I can't remember what your question was there, to be honest.
Yeah, just like, I mean, how do you assess how much is too much on certain investments into like Bitcoin, right? And by the way, you can find more about Sam Wilson at brickeninvestmentgroup.com. That's BRICKEN investmentgroup.com. And because when I hear these returns, they're like phenomenal, right? Growing up in real estate, right? If you get 6 to 10% cash on cash return, and if you can get an IRR of 13, 14, 15, 16, 17, 18 over 3 to 5 years, maybe double your money, right? That's over that time period. Like we're getting high fives, but all of a sudden this Bitcoin mining operation comes to your table, and you're like, well, I trust the guys. So that's the first thing you said. You got to make sure you hire someone who is the expert, right? And who don't try to be the how, but partner with the who, right? And then you're looking at these phenomenal returns, 100% within 12 to 16 months, and you're a passive investor. What's what's holding you back from putting more is what I really want to know. Like, help us understand that.
Predictable. I want predictability, and I think that's the name of the game for me. This is spec money, right? This is all this is. It's just speculative money, and with speculative money, you just got to go into it with the underlying just kind of knowledge that, hey, I could lose all this, and there's only a certain amount of my portfolio that I'm willing to gamble on and say, well, if it hits a home run, great, and if I lose it, it's not gonna hurt me that badly. So in a traditional real estate sense, we always say, hey, no one should ever put more than 10% of their total net worth into any one deal. That's just kind of the rule that I think a lot of people abide by. I think you should abide by. And I'm certainly not even going that far in Bitcoin. Just maybe it's because I don't understand it as well as I should yet. Or maybe it's just because I'm just more risk averse. I also, again, maybe that's part, I say I'm not risk averse in that sense, because I do like to know that I have assets that produce an income. Bitcoin, the only thing you're going to get out of Bitcoin is appreciation. It's not necessarily an income producing asset. So for me, I want to buy anything I can that continues to throw off cash. And especially in an inflationary environment, I want to have something that can be repriced easily. So I don't, we're not looking, I know industrial's stupid hot right now, but a lot of industrial leases are 5-10-year leases. They're triple net leases with a fixed return. There's no inflation riders in there. There's no like, hey, prime plus riders in there on those leases that where it escalates based upon whatever the current rates are. You're locked in for 10 years. If you're locked in for 10 years, getting a 6% return and inflation's at 8%, that's no good for me. So I want something that can be repriced, that produces an income. Bitcoin's not that, but again, it is kind of fun just to play with and see where it goes.
Yeah, absolutely. And if it is, and I believe it is the future for a lot of things real estate related, whether it be blockchain, whether it be transferring title, whether it be, actually transferring and buying real estate. It's actually happening now. I partnered with a luxury realtor down in Southern California out of Manhattan Beach, and she's sold about 5 or 6 deals now through Bitcoin. And that was the transaction, and found the escrow and put it all together. And that's pretty amazing. The other thing that's kind of cool too, when we were at the Best Ever Conference with Joe Fairless, and we were talking about, there's a guy on stage talking about Bitcoin mining. And as a part of that, he talked about the tax benefits and the ability to do what's called cost seg or bonus depreciation on a lot of this equipment. So talk about just the benefits of Bitcoin mining as it pertains to being able to have some write-offs in year one.
Yeah, we get to write off, almost every piece of that. Because it's almost, that's all it is. It's all equipment. It's 100% equipment. There's not really, I guess there's probably, wherever, again, I don't know where they're storing and housing the data center. I don't know how that works out. It's probably a lease at a data center, I would assume. But as far as the equipment itself, yeah, we get to write off every bit of that, and we get to write it off pretty quickly up front. So the expected write-offs on that, I think are maybe I'm speaking out of turn here, but I'm pretty sure close to 100%. So it's pretty astounding on the cost seg tax side of things.
Yep. Perfect. So that's good for transitioning into commercial real estate, right? And what you're doing with more of the traditional investments. Yep. So talk to us a little bit about maybe some current deals you're working on, what you're seeing in the marketplace, how maybe your underwriting expectations have changed in the past 6 months, and maybe even your strategy for finding deals.
Yeah, yield has become compressed almost across the board. And so one of the things that, again, we took down last year, we did 2 multifamily deals, which are doing phenomenally. As in everybody, I think, who's thrown money at multifamily in the last 24 months, you've just got tailwinds. You could be a poor operator and really make a lot of money, I think, in multifamily right now if you bought it at the right time. With that said, though, the competition just continues to ramp up. And again, we were both the Best Ever Conference. A number of people there who were multifamily syndicators, multifamily investors. I would put that number at 7 out of 10 of the people there were in multifamily, which that just tells you a couple of things. One is that there's opportunity elsewhere. I think anytime there is a mass of people heading in a particular direction, it's always a good time to look left and right and go, okay, or even back and go, what's behind me? What's everybody leaving that is just overlooked? For us, that is, we built a boat and RV storage facility last year. I hadn't really had any interest in the space until we started doing our market research and doing industry research on it. And I just go, wait, there is enormous runway in the RV industry. We had, a 43.5% increase in deliveries in 2021 over 2020. So we had almost 600,000 RVs delivered in 2021. We're on track already for 2022 to have that number of RVs delivered yet again, which is an astounding number. What do you do with 1.2 million RVs in the U.S. in a 24-month period? New RVs coming online. That doesn't count existing stock. It used to be something to the effect of like, maybe 2.5 RVs for every one RV site in an RV park somewhere in the country, and that would include all RV parks, there's a lot of we don't want. Now that number is like 5 or 6. Which is just crazy. It's like, okay, so you've got one, the demand caused primarily by the pandemic, so you have this uptick in demand. But the other interesting thing that we've seen is that we've had the demographic shifts. Most of us would have thought that RV parks or RV owners, north of 60, you're a retiree, you finally sold your business, and now you go travel the country and see the national parks, and what fun. The largest ownership group's 35 to 55 with kids. Which is like, wait, well, this is a weird shift. I'm one of those people. Like I'm in that age range, 35 to 55 with kids, and I own an RV, and we use it. We absolutely use it. It's a great way to travel. Once you figure it out, you're like, oh wait, there's a reason. There's a reason we have this. This is awesome. So, those are just a couple of the things that are really driving that industry. The unique thing is I think we are 5 to 6 years ahead or behind, however you want to look at it. We're 5 to 6 years from where mobile home parks were, in 2015 or 2016. Right now, mobile home parks are trading, in the 5 to 6-ish cap range on average. RV parks, because they're operationally complex, are trading in the 8s to 9s, which is just really crazy. It's like, oh, okay, so we can spend, 40% less money and get the same return. Fantastic. The other cool thing is that they have revenue streams are really unlimited. And as far as what can be brought in, especially if you're doing, luxury resorts. You're doing everything from putt golf to water park to, anything you can dream of that you can put in a really nice RV park can be done and monetized. So again, it's more of a functioning business, which is probably why the cap rates, trade a little bit higher because they're operationally complex. But all that said, lots of opportunity there. We haven't seen the huge amounts of money come into the space yet, and we believe we're still on the front end of where this asset class as a whole is going.
Phenomenal, Sam. By the way, you can learn more about Sam at brickeninvestmentgroup.com. That's brickeninvestmentgroup.com. And if you're ever out in Memphis, Tennessee, look up Sam Wilson, and he can show you around some RV parks. Maybe take you a ride in his RV. But I like how you have a broad variety of investments, right? Multiple streams of cash flow. And you're not just over concentrating. You're willing to adapt and pivot away from multifamily, and look at stuff that's not necessarily just mobile home parks, which was kind of like the next wave after multifamily, right. and you're helping others do that. And so, talk about a little bit about your guys's company, your team, and how you structure deals, and what would be an ideal investor for you.
Yeah, ideal investor, obviously it's somebody that wants to get involved but doesn't want to run an RV park. The return, and that's the fun part about it, is the cash on cash returns are just really, really strong. So unlike a multifamily deal, again, where you're waiting, you're like, okay, 6-7%, that's cool. We're going to be in the mid-teens cash on cash out of the gate, which is fun. That's a great place to be. Ideal investor, man. It's somebody that wants to get involved in the space, that wants to diversify. We see the other thing I look for in this is a 10-year horizon. I think anybody who's investing in real estate should go, okay, does this demand look good for the next decade? I can't say that in multifamily. I don't know. There's people out there that would argue that. Okay, fine. But for this, we really do see, I think once people get in, and once they've figured out the way to travel and the way to live, and the other cool, and I'm rambling here, but the other cool thing about it is a lot of these RV parks are long-term RV parks. They're like the middle class vacation home, in the sense that people will buy an RV, park them at a park for 12 months out of the year, leave it there, and they come and visit 3 out of the 4 months a year. They bring their kids, they bring their family. It's like, oh, hey, we've got our spot rented. We go to the same park. We go there for the summer, and then we come back and come on spring break and fall break vacations. So they function a lot like a mobile home park in the sense that you get a 12-month lease. It's still lot rent only, but you get a much better tenant with more predictable income. So that's another fun part of the business. But again, the ideal investor, man, it's just somebody that's looking to diversify. because we've got a lot of things that we're bringing to the table that the industry doesn't have, like dynamic pricing. I mean, think about that. We're coming to the table with a lot of mom and pop operators that are going, hey, rates are $70 a night for a transient spot. Well, it's like, well, no, rates aren't $70 a night. Rates are completely dynamic based upon what the demand is for the park. So there's no such thing as a set rate. We're going to set it much like an Airbnb or much like the airlines or the hotels, where prices are always fluctuating based upon demand. So those are small things we can bring to the table that just take that operation. We see a 5 to 10% jump in underwriting just on adding dynamic pricing to the bottom line. It's like, this is just crazy.
Amazing.
So, anyway.
That's great, Sam. Thank you. That was great. No, you weren't rambling on. You're adding value. That was fantastic. I want to shift a little bit to capital gains tax deferral and try to connect a theme here of having both an expert in commercial real estate and becoming an expert in Bitcoin mining, right? He's partnering with the experts. But what's cool is he's bridging the gap between the two. And so we have this cool thing called a deferred sales trust, Sam, where you can defer capital gains tax on the exit of Bitcoin, Ethereum, NFTs, defer the tax, and invest passively or actively in RV parks, in real estate deals, and business ventures. You can diversify into the stock market. You can have some liquidity there. And so at the Best Ever Conference, I was talking about this, right? But talk about what you see as the vision there. If there's over $2.5, maybe to $3 trillion of crypto, if some of that can exit tax deferred and then be able to be infused into these real estate projects, what that can do for an investor, especially when Bitcoin hit 69,000 and then dropped to like 35. And you're right, it's about 39 today. Right? Think about selling high, diversifying, buying low. Like, just kind of give us your feel for what that might mean for the real estate industry, as well as for the Bitcoin person who's going, man, can I defer capital gains tax on my Bitcoin? Can I defer it on my NFTs? Can I get into real estate? And the answer is yes, it's the deferred sales trust. But what do you think that means for people like you, Sam, in the commercial real estate industry?
I think it's an untapped source of investor capital, to be honest. So I look at that from a sponsor side. It's like, wow, more people need to be getting into this. One, because they are income producing assets, unlike Bitcoin, which again is in my opinion, some people would argue differently, but it is pure speculation, where it's like, hey, if this goes up, great, we make a bunch of money. If it goes down, man, we lost a bunch of money. I mean, for us, if they can get out of something which I think Bitcoin's great, again, that's why I'm investing in it, but if they can get out of something that's speculative and get into something that is producing an income, man, that's a great marriage, even if it's just, part of their portfolio. But take some of those wins, put them into something that will continue to produce an income for an extended period of time. I mean, that's the name of the game for us. It is, you read any Robert Kiyosaki, it's getting the cash flow game. That's what we want to do, is consistently produce income, especially in inflation and potentially recession resistant investments, which, where does Bitcoin go in a recession? I don't know. But, for us, I think we've got some asset classes that are picked that will handle both inflation and recession really well.
So here's the game plan I have, right? And we've done a couple of these deals so far with clients that exited out of, she bought it for 50,000. Her Bitcoin went to 50 million. One of my clients, we exited 5 million of that into the deferred sales trust, deferred about $1.8 million in tax, and then she was able to invest in a business venture, right? Cash flowing, producing asset, and also diversified a little bit into the stock market. But the point was, you hit the big appreciation, and she sold at 54,000 a coin. That was her exit part, right? And now it's at 39,000, right? So she was able to exit highly, appreciate it, and put it into a cash flowing producing asset. Now she kept the other 45 million, and that's dropped as well, but it'll probably go back up, right? And each time, if you can take these highly appreciated assets off the table, by the way, this works for primary homes and businesses, and you can infuse it into something that's going to produce that cash flow. That's kind of the Robert Kiyosaki way of doing things, as well as tax flow, right? Because you get some depreciation on these assets, especially if you're an active investor. You can also get someone as a passive investor, depending on where the funds come from. But that's the other name of the game. It's this tax flow, this cost segregation, and the ability to not have to pay as much tax as you're receiving cash flow. So just briefly touch on that, Sam, and then we'll go to the lightning round.
Yeah, I mean, RV parks and RV investing, much like storage, there are depreciation, there are depreciable assets, there's marinas, there's buildings, there's outbuildings. It's not going to be quite to the same extent that you would get, say, in a multifamily, complex, because there's just a lot of stuff. There's a lot of hard assets there you can write down. Not so much in RV parks and even in storage. I mean, I got a cost seg study back yesterday on a storage facility. I was like, it's there, but it's not quite as sexy as maybe say what you get out of a multifamily project. But yeah, it's certainly something that it's there, and you will reap some of the benefits.
Awesome. And by the way, you can start your deferred sales trust today if you want to learn more about that, by going to capitalgainstaxsolutions.com. That's capitalgainstaxsolutions.com. And we also have our crypto DST mastermind every Friday at 10 a.m. Pacific Standard Time, 1 p.m. Eastern, where we break down the deferred sales trust for the exit of real estate businesses, saving a failed 1031 exchange, and in particular, exiting cryptocurrency and finding out a way to defer the tax and invest it into diversified investments so you can create and preserve more wealth or help your clients or partners do the same. Go to capitalgainstaxsolutions.com. That's capitalgainstaxsolutions.com. That being said, Sam, are you ready for the lightning round?
We'll find out. Go for it.
All right. Knowing what you know now, if you go back to your 25-year-old self, what's the one golden nugget to make sure to tell yourself to do?
Man, I would say one, get in real estate ASAP. That's it. Get in real estate.
Perfect. Number two, what's the number one book you've recommended or gifted the most in the past year?
Probably some World War II history books. That's I kind of a junkie for those, so I can't remember the titles of them, but I've given several of those away.
Man, I read and I reread the book "Killing the Rising Sun," and it's a phenomenal book. Wow, phenomenal book. If anyone can check that out, "Killing the Rising Sun," World War II book, right? For those who are wondering. Okay, next question. What's your favorite leadership quote or theme that you strive to live by?
Man, this quote is attributed to Einstein, where he says, that which is counted oftentimes doesn't count, and that which counts oftentimes isn't counted. And so it's always just a reminder to focus on the things that matter.
Love that quote. I'm smarter because of it just now. I had never heard it before. That's great. Next question. What are you most curious about right now?
I guess probably like everybody, I want to know where in the world this kind of crazy times where they lead us. I think that's it. It's the world is in a state of very intense change, and I'm just curious where we wind up.
Likewise, yeah, I agree. Last question, Sam. After all your success, helping all the people you've helped at Bricken Investment Group, and helped create and preserve more wealth, your family, everything, right? After all that, how do you stay centered? What's the habits that you practice every day or every week to stay centered in your values? And how do you stay encouraged to charge forward to reach new goals?
Yeah, I mean, centered to my values, there's three things I say that life is, you need health, time, and money. Those are like the three-legged stool of life. Obviously, you can throw in spirituality in there as well. But, for me, I think the bedrock is health. Like, if you don't take care of your body, then nothing else really matters. I don't care how much time and money you have. I don't care how spiritual you want to be. If you're sick as a dog or dead, you're no good. And so for me, I try to make it to the gym 5 days a week and just really focus on taking care of myself in that regard. Because again, I've known some really wealthy people that had no health, and I wouldn't trade places with them for anything. So that's where I start.
Great wisdom. So much there, Sam. I want to thank you for being on the show. I want to thank you for using using your gifts for execution, right? Showing the stuff that you're getting done for others and for yourself for investments. And I want to encourage you to keep using that gift of execution to help more people create and preserve more wealth with real estate and maybe in Bitcoin mining. For our listeners who want to get in touch with you, would you remind them one last time what's the best place for them to find you?
Man, just go to brickeninvestmentgroup.com. That's BRICKEN investmentgroup.com. Sign up for our investor club there. Lots of resources. There's a weekly blog that goes out, weekly newsletter. I've got all sorts of freebies and giveaways and stuff. So go there, join our investor club, and look forward to connecting.
Thanks, Sam. Hey, I also want to thank our listeners for listening to the episode of the Capital Gains Tax Solutions podcast, also streamed on Expert CRE Secrets, where we believe most high net worth individuals and those who help them, they struggle with clarifying how to defer capital gains tax on the exit of Bitcoin or cryptocurrency or businesses or real estate, and not having a clear plan or clear strategy lined up is your enemy. And using something called a deferred sales trust and or getting with someone like Sam Wilson is a great way to create and preserve more wealth, because who you connect with and who you partner with matters, and you want to make sure you're working with experts who can help you achieve your goals. And so if you want to learn more about the Deferred Sales Trust, join our mastermind, totally free. You can go to capitalgainstaxsolutions.com. That's capitalgainstaxsolutions.com. And also look for the book that's coming out here in the next 30 days or so. This is a gentleman named Kevin Harrington from Shark Tank who's going to be in the book. It's going to be really fun, really exciting. It's called Building a Tax-Deferred Exit Strategy, the proven playbook for unlocking your ideal wealth plan when selling assets of any kind for yourself and your clients. And I so appreciate everyone watching and listening out there. And please rate, review, subscribe. Check out our YouTube channel. And share this with somebody who can inspire today.